I had done my analysis of Tesla earlier this week and was prepared today to share it with you, in which I would project what the price of Tesla stock would be in January of 2028 when Cathie Woods came out and told Bloomberg's that she was predicting the Tesla price would be $2,600 in 5 years, which would be 2030. And I said, well, maybe I need to extend my projections out and see if I can see how Cathie is getting to that number. And as I would say, I'm within about $200 of what she's saying. I see how she's getting there. Cathie is perceptive. I think she recognizes that Tesla is not General Motors, it's not Ford, it's not even Mercedes-Benz. It's a tech company, and she's basing her analysis and her pricing on, I think, a very accurate assumption, and that is the robo-taxi. And I've done a video in the past where I explained my interpretation of a robo-taxi. It's my wife gets rid of her Porsche and buys a Tesla and puts it in the garage, and while she's asleep at night, the car is notified that somebody in Mountain Brook wants to go to the airport in 30 minutes, and the car starts up, raises the garage door, goes, picks them up, collects a fee, and then comes back into the garage, and she wakes up in the morning and has made $50. That's basically what I see the robo-taxi as being. I believe that's going to be that kind of activity is going to be a major part of our economy in the future, that people like you and I will have a side gig, and we might have three Teslas in our garage making money for us. And we may even say, hey, this is such a good gig, I'm going to go out and buy some of Tesla's robots and lease them out to make people's beds and make their coffee in the morning and clean their house. That's going to be a part of our future. You know, we're saying, how are people going to find jobs? They're going to find jobs through robotics and AI. I mean, just because I know how to analyze stocks and use AI to do it, I'm going to have a job doing that, helping you make better investment decisions. But let's get to the point of what I believe is an evaluation of the health of Tesla. And I've created an 8-page report that I put on my website so that you can look at it and you can read it. What it does is it goes through its profitability, its liquidity, basically saying if in fact they are going to go into this robo-taxi thing, do they have the money to sustain it and to get it there? Then it goes into its historical earnings and gives you some projections here on what the earnings are going to be all the way through 2026. Then it goes into the forward-looking estimates of what the stock price is going to be from 2025 through 2027. And this is the chart that I've created. And as you can see, what I've done, and I've kind of put together, we look at it under my analysis in several different scenarios. The first one is the cash flow analysis, the DCF cash flow approach. And what you do is you anticipate their cash flow and then create a multiple of that cash as to how it reflects on their price. And then you use a PE multiple. This is where you anticipate what their earnings are going to be, and then use historical PEs to multiply at times their earnings to come up with what the price is going to be. And then the final way is technology. Or technical analysis. And what I do then is take all those three methods and then come up with a conservative, a moderate, and an aggressive price based on those basic variables. And what I come up with is a price that as the end of 2027, which is where I normally go, a moderate price of $475 and an aggressive price of $1,395. You'll find all these numbers on my website on what I call my tell sheet. And I believe there are tells. There is data that is available, both past and future, future estimates that can tell you what the price of the stock is going to be if those variables actually take place. Now, as an analyst, what I do is update those numbers every quarter whenever they come out with, they meaning Tesla in this case, whenever they come out with an earnings statement, I analyze it. I take the new copy of their income statement, their balance sheet, and their cash flow statement, put that with their transcript, and put it in, give it to my AI agent, that'd be Samantha, and she does this analysis for me. I also feed her any other information, such as the Bloomberg article, to give her some insights of what other people are thinking, and that's how we come up with this 10-page report on Tesla. I did one on Micron yesterday. I did one on Apple the day before. Last month I did several, but I basically follow 60 stocks, and I weed it down and say, okay, based on the numbers and the technology, the technicals, and the what is the price of the stock going to be next January, the following January, and the following January. And as I say, Cathie forced me to go out to 2030. And again, 2030, the conservative estimate is $360, way off of Cathie's. That's based on a PE ratio of 90. Its current PE ratio is 104, which would generate a price of $1,261.52. And then its price with a 138 PE ratio, which is Tesla's average PE ratio over the last 5 years, it would be $2,415. Now, is it realistic to think that it will have a PE ratio of 138 as a car company? No, not at all. Because the only companies that have that kind of PE ratios are companies that are changing the world and have a substantial TAM. And it comes back to, as AI is coming into place and people are asking, what are people going to do for a living if they are replaced by robots? Somebody has to service those robots. Somebody has to make those robots available. They are a machine that has to have someone to take care of it. Well, that's a whole new industry. I can see that I could have 5 cars in my driveway and they all be robo-taxis, and all day they're out making money for me. All I have to do is clean them up and maintain them and wash them, and I have a business. Now, if my wife wants to be in the robot business, she might have a household cleaning service, and it won't be a little car that drives around and some 3 people get out and come in. No, it will be a robot that I put in your house, and you lease it from me on a monthly basis to make your coffee, make your bed, clean your bathrooms, do whatever. And in fact, as the population ages and someone needs a nurse or a healthcare provider, it's going to be a robot. Well, somebody has to own that robot and manage that robot and maintain that robot, and that's going to be a business. You aren't going to have to work like you used to. You will just manage robots, whether it's a car or it's a maid or it's a lawyer or a financial advisor. It's going to be a robot because, again, when you're dealing with human beings, you have the knowledge of one human being. When you're dealing with a robot that is connected to AI, you have the knowledge of the world. So who do you want? Do you want to hire a person for $50,000 a year, or would you rather rent a robot for $200 a month? I mean, think it through. It is where we're going. It's what's going to happen. And Cathie and I think Tesla is going to be an integral part of it. Now, if you want to go to see these numbers, if you want to read the document that I've created, the financial health evaluation of Tesla Incorporated, and you want to make a better investment decisions, I do this eventually for 60 stocks. And I think what will happen is you will go and you will print this and you will read it. And as you read more and more of these documents, you will become more and more attuned as to what does it take to become a good a good company. I got a comment today, and it said, I think Qualcomm is a good buy. And I wrote back and said, no, look at Broadcom. Qualcomm is projecting that their earnings are going to grow at an average over the next 4 years of 3% per year. That their revenue is going to grow at 1% per year. But if you look at Broadcom, they're growing their revenues at over 20%, and likewise with their earnings. So if you know those numbers and you recognize how that relates to what the price of the stock is going to be in the future, if you'll read every one of these that I put out, you'll become a financial analyst. You'll know what return on assets are. You'll know what the difference between gross margins and net margins are and how they relate to the profitability and the growth of a company. You'll understand when the people on Shark Tank say, have you reached scale yet? You'll know what that means and what it means to the bottom line of the company's revenues, and then what that means to their price of their stock. You're in a game that you're playing with professionals. You've got to get up to speed, and I can help you get there. And I want to prove it to you, so I want to give you an opportunity to come to bestofusinvestors.com. The link's in the description. Go to our gold platform, and I'll give you access to this for free for 14 days. At the end of 14 days, you make the decision, can this make me a better investor or not? And if it can, then I'm going to charge you $19.95 a month until I can't make you a better investor. Is that fair? I think it is. I'm buying Samantha. I'm investing over $20,000 a month to make you a better investor. And I think it's fair if you pay me rather than $20,000 a month, $20 a month. Because if I get 1 million of you, I'm set for life, which however long that lasts. Okay, go take a look at it. I think Tesla is a bargain at whatever price they want to sell it to you for, but you read it and you look at it and you see if Cathie and I aren't on the same track, and you have an opportunity to come along with us. Talk to you again about more of this in the future.